Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. And I hope you had a safe day trading last night after the FOMC and their drop to the downside after rising up. Let's take a look at the charts, shall we? Boom. All right, so we were seeing that it was hanging out for the last 3 days above this pitch fan line. Coincidence? I think not. It's been getting rejected and selling off, offloading positions maybe. I have no idea. But they came back down into this 6.5 region and bounced back up, and they're getting up to the 706. Can it continue to ride up within this ascending channel region? Seems like it might be the case. Let's go into the liquidity heat map, shall we? What is the heat map? Well, once again, it is where they bring the fire and leave it in the charts to get crispy, with the market makers taking their positions out of the game by burning them to a crisp. So that's why it's the heat map of the liquidity. So let's go into the 1 minute time frame. So I was pointing out in Rainier's Discord, I said over here, once we reached my region, I said upside, and we got it. Beyond 28,665, we could chill out or drop though. And I was pointing out this guy here, which looked like a large amount. They came and got the first guy, but I was saying this guy looks like they might come back and get him. And sure enough, they did. So that person down below was here. This one. And they came and got this guy too. So they came and got all the longs, as everyone thought the 0.25 basis points would lead to upside. It led up to upside in the pre-market, but they dumped on you. So I took profits on mine at that caked liquidity region. I said this 25x caked up region is about as high as I can see it going. It did spike up a little bit higher at 28.89 and then came down. And I happened to take a short, but I took profits on that early because you never know how long it's going to go. So let's look at where we are currently, shall we? So they came back down into this region where they are currently. Actually, let's go back and discuss what they came back for, shall we? So they came and took these other late long guys, and they also caked it up nicely. Everyone was longing the entire way down as they came and got them, and it happened to be stacked up with the longs that had been built up since March 19th. So all those guys that were in profit riding this up the entire way, they came back and knocked out all of these guys. So these guys are now out of the game because they didn't pay themselves or set their stop loss into profit, which you should be doing at all times. Not financial advice, of course, but on your paper trades you should be doing that so you can have fun. But yeah, if you look at how this plays out down here, we started to see more longs. People were precariously not taking the longs on the V-shaped as they came back and got these shorts that entered the game late, and they chilled out after they knocked out a little bit of stacked liquidity of 50x and 25x up here, and now they came down to get these 100x long guys. Are they going to continue down to these 50x guys down here, or did they have their fill and head up to this region? Now the thick region that is down here is an interesting bit of happiness right here. A bunch of 100 million here and there. In the immediate 1 minute time frame, we have 8.5 billion imbalance to shorts, so they could come back after creating a W pattern of some nature to come up and grab some of this to the upside. You do have large amounts stacked up here from that drop. This guy in particular at 29k even, $280 million. All right, let's go into the other heat map, shall we? Let's see how you all doing. Getting crispy up in here. How do you like my highlights, my purple highlights? Okay, so we do have a bunch of billions stacked down here below at 26,550 and below here. So they could come down in this region. I would say 2, 4, 6, 8, 10. It's probably about 50 billion based off of that entire range there. And that's the imbalance to the downside on the 7-day. So they made their expression. This was Wednesday, and we're having midweek reversal Thursday, which is what exactly? A continuation to this downside area, or come back up into this region? If you look at the 7-day, this is kind of thin. There's only a billion or two just above here on the 7-day, so they could continue lower based off of this time frame. Let's go to the monthly. So they previously came up into this 28.9 region. This higher time frame pool also, which we'll get to in a minute, was a large amount that they knocked out, which is why they did their last amount to get up here. And yeah, we're seeing they came down into this region. There's not really much in here on this 3-month time frame to make a difference on. It does still show there's a lot up here at 29 though. You have a $28 billion pool down here at 26.4 and a $47 billion pool at 29.1. So from this equilibrium point between the two, it would suggest to go up to this region based off the 6-month time frame. Although if you look down below here, you do have a large amount starting to accumulate in a thick manner below 20K. But there's a large gap to that region. And this is where we start to see where they came up to last night. On New York session, they came to 28.8 and knocked out 82 billion here, so now it's down to 0. And 29.2 is the next pool with at 83 billion if they decide to come up to this region. If you look down below, there's not much by comparison. You got 24 billion down here. You got 33 billion, 33 billion. It could be getting into that region where they want to come back into this though, because the beyond 30 billion, or 30,000 rather, it's starting to get thicker than before. This previously used to be 0. That 30,000 used to be less. Now it's up to 32 billion, 46 billion. So the shorts are starting to pave the way beyond 30K now. This was not here before. Interesting. So it's starting to get thicker heat. Starting to reach up possibly even to this pool at 34.8. There's 80 billion up there. Now, why do I feel this way? Why does it look that way? Well, this entire gap down here just doesn't really have that much. I mean, we can go into that in more detail. Hold on. So you got 51. A lot of these have 18, 0, 61, 46, 37. 9, 0, 0, 46. So in this entire region, they skipped a lot of pools because everyone was feeling bearish. So the speed in which they went up didn't allow people to open up pools here. So it's kind of interesting. It's like they gapped up to avoid having to pay people. So based off that narrative, to come all the way up here and then come all the way down, they'd have to be paying somebody up here. So not to say it doesn't happen on a slow decline of inducing longs all the way down. That could be a possibility as well. Alright, so let's take it a little bit slower today. So there's a billion pool down here at 27,150. So this region down here could be on the cards for the amount they've had over the last week, 7 day. Let's see how y'all doing. How y'all doing out there? Good? Let's go take a look at the fibs. So I didn't remove this line. I was telling about that pool. I was saying we might not go really much above that point, and sure enough, we just barely went above it and crashed. So where are we in terms of the Fibonacci? All right, so on the external liquidity range, you have this fib that we drew from the top of the impulse to the bottom of the impulse here on the daily time frame. You have the 0.706, 0.66, 0.65, 618 region, and we previously bounced off the 0.65 yesterday, and now we're potentially getting rejected at the 0.706 if we can't make it above this region and maintain it. In terms of a bullish projection, you still maintain the bullish levels here on the daily. So let's do a little bit more in the minutia here for the fibs. So for bearish projections, let's do a bearish one, shall we? So if we say from this impulse to the downside in the retrace, let's say we can't make it above this point. Let's just say this is the top and we're starting to make our descent. So here is how you would start to chart out that idea. So you put your impulse to the downside, the retrace to the upside, and if this is as far as you go, if you break below 27,199, then you can expect downside in these regions to occur. With potential bounces at the 0.65, which also happens to be the 618 of that larger liquidity, external liquidity range. Okay, and we had previously done that. You could do it from here. This is a 5-minute time frame, so we'll just start at the top, bottom here, to the top, to the bottom. So the 236 coincides nicely with that 706 of the external range, which is 27.5. If we cannot maintain above 27.5, then this bullish idea is null and void. But if you can maintain it, you can kind of get into these possibilities with potential fatiguing at these points. We can move this up a little bit now at 29K. So that's how you trap the price on both sides and try to get some sort of vision as to how you would play that. Boom. If you guys didn't see my little snippet yesterday, that was kind of a fun little thing we did about how we got the heads up display. We might bring that back. I was doing it live. It was a very interesting experience. Boom. This little cool space, this head space I'm in. How y'all doing? You guys have anything to share? What's new? You guys good? Nice. Alright, well, we're going to go back to the charts with Momentum Master on now. So I think we've done the due diligence on the fibs and whatnot. So let's go back. Alright, so you're getting a 4 time frames oversold signal here on Momentum Master. What is Momentum Master? Link in the description, and go to momentummaster.info for more information on these indicators and what it is they're displaying. We also go over what that means as well. So you have the 15-minute here. We're at the 15-minute bottom of the Keltner channel, getting a 4 time frames oversold idea here on the 15-minute, but it's also coinciding with what time frames? Well, it looks like we previously reset the 6 hour, if I'm not mistaken. The 6 hour has gone down, although the Williams is starting to dump on you. So you could see this get suppressed and continue to this bearish projection idea we talked about. The 12 hour also getting oversold, but the Williams giving you that alarm telling you watch out. Nothing goes up forever. The 22 hour, Treasury 22, is also getting the crossover event locked in on the 22 hour time frame for a potential dump. Baselines above price starting to come down, the alarm as well. So you got an alarm on the 22 and an alarm on the 12 hour. So this is potentially spelling some downside for BTC based off just the immediate analysis of the higher time frames. And let's take a look. Yeah, so the 12 hour closes in 10 hours, which would be at the daily candle close. And we go to the 6. Six started to get a little bit of a curve here. It could be a little bit of a fake out though. Let's look at the 4 hour. Four-hour had hidden bullish divergence down here. Let's see what that was on the RSI. Hidden bullish on the RSI and hidden bullish on the money flow. The money flow is flowing up above the RSI. The RSI is pointing down and the money flow is pointing up. So this could be a struggle. Is this going to play out? The MACD is not crossing just yet. Not in that ideal position. And the one point that you could be seeing here, which is not good if we cannot maintain this cloud. This could be a bearish retest to drop down out of the cloud. The hourly time frame. Hourly time frame cloud is thick purple. So if we were to break above, let's say on a liquidity grab idea, you would have to come up and then bounce off it to continue if you hold that. But with this thickness, you would expect it to hit it and then come down in some fashion, and then potentially continue as it thins, just like so. So it would get thin. Where's another place where it, so it came out above it, came back, kissed it, and then you were gone. And we saw this on the live, I remember, and we were talking about it holding beneath the baseline. So holding beneath the baseline is a good idea to continue to the upside. As you see, we are not in that position just yet. So you'd want to see that position maintain above the baseline. So the hourly time frame not necessarily in a nice state. You are getting that crossover event on the baselines, and it's attempting to hold the fat boy baseline. But the hourly is overbought and starting to come down. Did open. Let's take a look at what happened to the S&P and whatnot. Looks like we gapped up, and the dollar so it broke beneath the 618 here on the daily impulse, and it's attempting to hold the 706 region. Previously went to the 786 by the looks of it. Let's see. If the right click will let me do it. Come on, right click. I know it's lagging. Yo, Rainier, thanks for stopping on in. There we go. Let's go to the basic. Yeah, so previously wicked off the 786 here, and now attempting to reclaim the 706 on the dollar. You can erase that projection, it's over. We'll come back to that in a minute. So we previously went up to the one region of that bullish projection and then came down with the fury to the cloud. So this is an example of kissing the cloud. Are we kissing the cloud to continue here? This is an interesting thing. The cloud is thinning here on the S&P, and we came down like a hammer, boom, on the cloud, held it, and then now we're gapping up from here. This is a filled gap, so we can delete that now. Are we seeing that rise, kiss, and continue idea? Interesting. Let's go lower, shall we? 4 hour is overbought here. Let's look at the 6 hour really quick. 6 hour overbought. Good triple top if you have some gas in the tank from the 12 hour, which you do on the Williams as well. Starting to thin though, losing a little bit of strength. The hourly is coming down, as is the Williams, but you're seeing this holding of the cloud here on the hourly of the S&P. Reclaim the weighted and the adaptive. Could be coming back up here on the hourly time frame. "15-minute play is in session. You had previous bearish divergence playing out. Williams in on your side, MACD pointing up. Starting to see a potential 15-minute scalp play here on the S&P. What does that mean for Bitcoin? Let's go back to Bitcoin real quick. So we previously went up and faded, went out and took out some pools. Let's see what those pools were. They went and took out those 100x guys. 27.3. There is a little guy up here at 27.52, 27.24, 55, 47, 37. Swatting of the 100X. Snowman, how's it going? Thanks for stopping in. So we have the 15-minute also getting rounded out here. Even though you're getting these rockets, you're getting failed rockets on the dollar. Just can't stand the burning of both ends of the Fed, increasing the rates yet bailing out the banks, doing the counter mining of their own ideas, being hypocrites with their broken system, is causing this to not increase as it would have normally. Which is causing the S&P and everything to go up a little bit. So they did this smooth liquidity grab on everything because everyone was bullish on the 0.25 idea. I was talking about it to some members in the Discord, talking about how it seems so obvious to long that it might actually be better to short it. And since they knocked out most of the people, it could still continue here if it holds these bullish trend-based fib levels. So the same could apply here for BTC if it reclaims this 236 region, but it needs to get above here before any of that can be true. So once again, that level is 27.5. If it can reclaim 27.5, then we could see a pierce up to the upside in terms of getting some of this liquidity up here. The imbalance on the 1 minute time frame is 8 billion in shorts, so they could come get that in some way, shape, or form. We just look for some divergence of some kind. MACD trying to point down on you on the hourly. You're getting that curvature on the cloud here. This is no good for a long. You're getting the Williams in the oversold status now though. So the worst could be over on that. Go to the 5 minute. So you had let's just go over what Asia did. So Asia took it up, took it down, took it up for lunch, and maintained this region, basically consolidated, and then kind of set it up for London, which went sideways all day, and then New York started to drop it. So we're not in a position that is as clear as it was in times past. You noticed in previous lives that we were able to call it and put it in a place that went up, like particularly yesterday. We were clear that it was going to go up, and same with where was that? It was on an hourly time frame, so let me go back to that point. It was a few days prior to that, if I recall. So we saw this kiss to the cloud, and we were still saying this cloud was strong, so it took us to the upside easily with that call. And we saw that before back here. We saw it last week when they reclaimed the cloud and it was thinning. That was a very easy call as well. So some days it's easier to put in a position than others. As of right now, it's kind of ambiguous. You have clouds not in your favor and clouds attempting to get in your favor. So what you would want to see at this point is, if you're trying to short a failure at the 27,200 region, would be to go down into these pools down here. The hourly time frame is resetting currently. What does it mean to reset? Well, the probability of the stochastic is pointing down on you, so you're getting the MACD start to cross down. But the Williams is also getting low, so it might not be that furious of a dump. The cloud was extremely thick because of the intensity of this exit of volume here. So you're getting a rejection on this 200 weighted moving average as well. You had a rejection, attempt to reclaim and fall back down out of it. So we're just seeing this absorption of this idea of the dropping out. People are scared to go long. It's unclear, ambiguous is the word. In the current immediate location we're at right now, they could come down into these regions right here at 27 even, 100 million guy, 50x long. Not out of the realm of possibility. Let's just put on the ML application one, shall we? The free one. Busy morning, but I made it here. Nice. If it had held this cloud and the cloud remained thick, this would have been a cool continuation idea, but so they're swatting off the 100x here. There's a 100x pool that they came down and grabbed. We saw that on the high block here. They consolidated it for you in this $100 million grouping. This free indicator shows you other guys that opened when they opened it, and then they came and grabbed them. So there's other pools of people down here at these regions at 27.2 and below. Is it starting to make some divergence? Generally, if it makes money flow divergence, like this hidden money flow divergence, it spawns like a liquidity grab and then it shifts out if that's the case. So divergence doesn't mean the exact bottom. It means like a position being disguised that's entering, and then it spawns a liquidity grab to fill the rest of their order up if it was to go higher. But it's essentially these 100x pools that they keep swatting off. 100x here in orange, 100x in green. So these green guys, they don't want them to keep getting paid forever, so they're going to come either bearishly retest this cloud, spike up and knock out these 100x guys and then continue lower, or go up to these regions and try to knock out some of the 50x. It just depends on how many imbalanced people they have. It's a constant swatting of liquidity, like gnats to a flame. Getting burnt to a crisp. So what is this indicator here that is free? This is a liquidation levels indicator by ML Applications. You can type in liquidation levels version 2. Here it is, boom. Make sure you set your threshold to 0.1 for every 100K trader, and then show the statistics so you can see like this what's their position size. So it previously knocked out this 100K guy, or nearly $1 million guy, sorry. So you're starting to see some shorts enter up here. Do you guys have any altcoins or anything you'd like me to look at? 5 minute also thick now. So they could come down to this region in actuality. Boom. So here's the example. You had 100x building up here. They induced an idea here, and then they rounded out their top to come poke their balloons, pop, and they popped them. And most likely that spawns some divergence, which then they insert their position off their money and come up a little bit, and then that's just them entering using their money. And so now you're starting to see some more 100x shorts up here, some 100x longs caked up with the 50x here. I don't generally look at this indicator down on this time frame. It gets a little bit busy. So we're starting to see the 1 minute. You can start to see those reversal points down on the 1 minute. Everything is fractal in nature. So the cloud was thick. It previously came up, pierced the cloud, failed to bounce off of it because it's thick, right? So it comes down, sputters, the cloud is getting thin, and now ideally you'd see if there was a reversal idea in mind, it would pierce up and then come down and retest and come off of it. If that was going to happen, this is the type of thing you would see it at, where it's thinning out and providing that idea of volume entering back in. And you got the crossover event on the 1 minute time frame here. Let's switch to Heikin-Ashi, shall we? So you got the crossover event, you had the birthday candle with no wick here. So you're starting to see this possibility come to fruition on the 1 minute time frame. And can it cascade is the question, even for a scalp. Starting to see some volume enter here on this 1 minute time frame, of course. 18 minutes. So it closed above that. Let's see what the hourly looks like. The hourly should have closed just now. Let's go back to the regular candles. So reset some of the stochastic data a little bit. Come back to that. So 618 level, if it were to drop down out of this to mined, would also be 2733. We're talking about that bearish trend base fib level at 27,200. So if it goes beneath that, bounces off the 618 and can't reclaim the 236, then the bearish sentiment is intact to continue lower. We're seeing this potentiality. We have 2 hours for the 4-hour candle close. If the 4-hour candle closes beneath this cloud, the bearish retest of the cloud idea is also intact as we reset some of this Williams idea. So once again, we'll recap it for you. So we'll just say both scenarios because it's being ambiguous at the moment. It looks like the 6-hour Williams and the 22-hour crossover events, the medium time frames are telling you you could be seeing a retrace to lower levels down here. What does that mean? Well, you'd have to go below this 27,200 region and close some candles that we just mentioned below that and start to make breaks down into the 26,200 region down here at 26,268, and then you could see these levels below for bearish projections. Now if you happen to hold above the 236 here on the bullish projection at 27,500, you could be seeing these another hit to 29k. Another hit. Well, you could see a hit to 29k on that bullish projection. We had previously seen a hit on a bullish projection to 28,458, and we saw the pool that we reached into recently. So all of these possibilities are on the table, but is being ambiguous at the moment after yesterday's drop. The current time frame that you have in your favor that's staving off this hourly at the moment is the 15 minute. The 15 minute is the saving grace of the hourly by the looks of it. The hourly is not going as hard as it could. Now we could see how that works by watching how Momentum Master, the interaction of between the waves occurs. So we'll do that and then call it a day. So we turn on the higher time frame and lower time frame stochastic RSI. So here we are on the 15-minute time frame. In blue and purple is the 15-minute. The 30-minute in fuchsia and aqua is coming down on you like this, and the 5-minute is also coming down too. So when these three get down below, they could stave off the hourly dump. So the 30-minute time frame is here. You have the 30-minute coming down, already is down, and the hourly in fuchsia and aqua is coming down, and the 15-minute is coming down too. So everything is kind of on its way down to reset. And the hourly time frame. So the hourly time frame is coming down with the 30-minute, and the 4-hour is attempting to catch the hourly from being as bad as it could be. And the 4-hour. And as we said, the 4-hour should be trying to curve up here, catch the hourly time frame in orange and yellow here, starting to curve down. The 4-hour saying hold up, but the daily is also ominously lurking and pushing down, wanting to reset. So the daily time frame is also overbought. So you have the daily time frame here with the 4-hour coming down, and the weekly is holding you strong to the upside. So the thing preventing the daily from resetting right now is the weekly time frame. So the weekly is overbought, but it is curved up, which is keeping the daily from immediately just dropping off the face of a cliff. And that's how you can look at the stochastic interactions on B. It's fascinating to say the least. I don't leave them on all the time. They're just meant to be like this heads-up display. Turn on components when you need them. We're at the bottom of the Keltner channel here on the 15-minute, and we're kind of wicking off this demand zone. So it's kind of interesting. We were previously seeing that the 1-minute time frame was trying to thin out on the cloud, but now it's starting to make it purple again. The interest is not coming in. Just looks like it's providing more downside. Do you guys have anything you'd like me to look at? Looks like we are. Alright, ladies and gentlemen, well, I'm going to call it a night. I thank you for your time, and we will catch you on the flip side. Once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and I will catch you on the flip. Peace.